everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US Market Update. One of the charts I showed last night created an awful lot of conversation, so I thought I'd pop back in so we could take another look. Before we get to the charts, timestamp it is 2 a.m. Eastern Time on Monday night / Tuesday morning, and the futures at this moment are up 22 points. So pointing to a slightly higher open if they hold to the open. The chart that I was mentioning in the intro that created the chatter was this chart here where I drew a trend line. So this was the chart in last night's recording, not counting today's move. And you can see that it was a pretty much of a 45-degree angle. Now, a lot of people feel that one of the drawbacks of technical analysis is it's too subjective. And one of the more subjective aspects of technical analysis is drawing trend lines. A lot of people do them differently. Some people feel you just need 2 swing lows or swing highs to connect. Other people feel you need 3 points to connect. Most people agree that the more times the market or the bar touches the line, candle, whatever chart you're using, touches the line, the stronger the signal is. Well, one of the rules that I go by, because you certainly could have made a case for connecting the low and drawn it through here where you would have connected a bunch of those lows on the way up. The rule is that the more vertical you draw the trend line, the less accurate it's likely to be. So you can see that would have been a pretty vertical trend line. So I like to be more on the 45-degree angle side of things. And I think if you take a look at where we are, including today's move, and we draw another trend line opposing that one, roughly connecting the highs, we have a pretty good channel there of where we are moving to the upside. So it does look like an uptrend moving up. We have bounced down from the 61.8% fib levels we've detailed multiple times, but I think it makes a nice clean channel. And without breaking through this down trend line, I think it's hard to say that we've started another impulse to the downside just yet. A couple other things I wanted to mention. Let's look at volume. With that move back to the upside that occurred today, volume ticked back down below average. The other thing that I wanted to look at was moving averages. And you can see that on the low today, we came down to the 30-day moving average, which is that fuchsia line, closed back above the 50 and right on top of the 10-day moving average. So with all that considered, hard to call that we've started an impulse to the downside, at least not yet. But breaking out of that trend line, at least in my opinion, and all this is just simply my opinion, then we can start to look at that C-wave impulse having started. One other thing I wanted to show you before we wrap things up is the 10-year bond. And boy, is it getting into a pretty tight consolidation. And with this area here, we can pretty confidently say that the 10-year is about to make a pretty significant move. And if you know anything about the bond market, when the bond market moves, it affects the equities market. And when this 10-year bond breaks out, that will affect the equity. It's going to be interesting to see how it all plays out. Hope you had a wonderful start to your week. Back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.